In our final trade of the day, joining me now is Peter Lusk. He's with the Chicago Board Options Exchange. And Peter, as you know, the options have been telling us a lot about the Amazon trade. So welcome back to the show. Thanks for being on today.
Thanks, Angie. Love coming on here. And you know what? We're all about the straddle. I know you are too. The at-the-money straddle for Amazon is telling us a move of about $45 up or $45 down. And we're always looking at the straddle. And I just made a joke to a friend of mine. If somebody could come up with direction with a formula, boy, we'd be living high, huh?
Absolutely. Always hard to pick a direction, but Amazon has been a big winner. Earnings came out after the close last night. So what did you feel like the options market wanted to happen with this stock? Did the options market predict an up move, though, do you think, based on call activity, or a down move, maybe based on some put activity here?
I saw a lot of upward activity with calls. But you never know, because there's a call buyer and a call seller. There's always that, relationship on each one. Sometimes with the Amazon being at such a lofty high, you could have these call sellers choosing a target price for Amazon as a means of getting out of that stock. So it's hard to tell, but for the most part, I had a trade that I came across, which was a trader came in and he bought 200 of the 1075 calls. With 1 day to go, these guys are trading $21.50 with 1 day to go. That's all time premium. And we talk about time premium, how about the theta? We know theta is the change in an option's theoretical value for every 1 unit change in time. The theta on this option was $12. Normally when we talk about options, it might be 30 cents. These options are so rich, and the richness tells us, yeah, we're going to get some movement in Amazon, which we got.
The translation there is options traders were spending a lot of money to get in on this trade.
Yep. Call buyers, put buyers, all jockeying for position. But they're rich, they're very expensive options.
Now, that doesn't always happen, because once you get post earnings, the anticipation is today we'll see that implied volatility come down and options prices will be less expensive. So one of the things I think you have to watch with the options market is, even though we're looking at a $1,000 stock here, buying an options contract is a lot less money than going out and buying a share of Amazon.
Oh, at these lofty prices, you bet. That's what the great trade-off is with options.
Well,
well explained.
Thanks for coming on the show, Peter.
Always a pleasure, Ange. Thanks so much.